The UAE introduced a 9% corporate tax, and just like that, everyone assumed the tax-free dream was dead. I've seen so-called experts online claiming that all free zone companies are automatically safe, while others are saying every single business now has to pay up. Both are dead wrong. The truth is, thousands of businesses all across the Emirates are legally paying 0% tax right now. This isn't some secret loophole or a shady backroom deal. It's written right into the law. So, for the next few minutes, I'm going to show you exactly how they're doing it, based on the official government rules. We'll break down who actually has to pay and who is legally off the hook. If you own a business here, or you're even thinking about it. This is information you really can't afford to miss. When Federal Decree Law number 47 of 2022 was announced, it sent a shockwave through the business community. For decades, the UAE was the definition of tax-free. Now, a 9% tax on profits over 375,000 dirhams is the new reality for some. But for many others, it isn't. The biggest problem right now is the sheer amount of bad information floating around. One guru says one thing, and another expert says the exact opposite. It's created a ton of confusion, and that confusion can be an expensive mistake. My goal here is to cut straight through that noise. We're not going to listen to rumors or forum posts. We're going to look at the law itself and break down the 5 most important categories of businesses that are completely exempt from this 9% tax. I've spent hundreds of hours digging through the tax law and ministerial decisions to help my clients get this right. And the biggest takeaway is this. The government has been very smart about this, designing a system that meets global standards while still protecting the industries that make the UAE's economy tick. Let's get into the first and maybe the most common exemption. Let's kick things off with the one that helps the most businesses in the UAE. Small business relief. This is the government's way of making sure that the backbone of the economy, the startups, the small and medium businesses, the local shops, the freelancers, aren't crushed by a new tax. Here's how it works, and you need to know these numbers. If your business is based in the UAE and your total revenue is AED 3 million or less for the year, you can apply for small business relief. If you qualify and choose this on your tax filing, your taxable income is treated as zero. You heard that right, zero. It doesn't matter if you made AED 100,000 in profit or the full AED 375,000. You pay nothing. Think about a new coffee shop in Ras Al Khaimah or a freelance consultant in Dubai. If their total sales for the year hit, say, AED 2.5 million, they can simply tick a box when they file, and their corporate tax bill disappears for that year. This is a total game changer, letting small businesses pour every last dirham back into growing the company. Now, let's bust a myth right here. Some people think they can just slice their business into a bunch of smaller companies to cheat the system and stay under that 3 million dirham mark. The law is already one step ahead. There are anti-abuse rules specifically to stop people from artificially splitting a business just to get the tax relief. This is for real small businesses, not for people trying to exploit the rules. One last thing to know. For now, this relief is temporary and confirmed for tax periods up until December 31st, 2026. To get it, you have to be a resident person. That can be a mainland company, a free zone company, or even a freelancer with a license. The only ones who can't claim it are companies that are already a qualifying free zone person or part of a huge multinational corporation. Getting these details right is everything. It's the difference between paying a 9% tax or paying nothing at all. If you want to keep up with these kinds of changes, I have a weekly blog where I break down the latest in UAE tax law. The link is right in the description below. Okay, this is where most of the confusion is. For years, the sales pitch for setting up in a UAE free zone was 100% tax-free. So when the corporate tax was announced, a lot of people just assumed nothing would change for them. This is the biggest and most dangerous myth out there. Not all free zone companies are automatically exempt. To get that amazing 0% tax rate, your free zone company has to become what the law calls a qualifying free zone person, or a QFZP. Think of it like a special status that you have to earn and constantly maintain. To get it, you have to meet a strict list of conditions, like having real staff and offices in the free zone, getting your finances audited, and most importantly, earning what's called qualifying income. So what on earth is qualifying income? This is the heart of the matter. Qualifying income is basically money you make from other companies inside a free zone, or revenue from exporting your goods or services to clients outside the UAE. For example, a logistics company in Jafsa that works with a factory in the same free zone is earning qualifying income. A software company in Dubai Internet City that builds an app for a client in Germany is also earning qualifying income. All of that income is taxed at 0%. The problem starts when your free zone company does business with a company on the UAE mainland. That money is usually not qualifying income, and it gets hit with the standard 9% tax. This is where the de minimis rule offers a tiny lifeline. A QFZP can earn a small amount of this bad income without poisoning the whole well. The rule says your non-qualifying revenue can't be more than 5% of your total revenue, or AED 5 million, whichever is lower. If you go over that tiny limit, you lose your special status for that year and the next 4, meaning all of your profit gets taxed at 9%. So, the 0% tax dream in a free zone is still very real, but it's not a guarantee anymore. It's a privilege for businesses that are actually using the free zone like it was intended, for international trade, not to compete with mainland businesses tax-free. Now let's talk about the absolute giants of the UAE economy. Think about a massive oil rig off the coast of Abu Dhabi. The company running that rig, pulling up crude oil and selling it, isn't paying the federal 9% tax. Why not? Because businesses that extract the UAE's natural resources, oil, gas, minerals, play by a different set of rules. They are exempt from this federal tax law because they're still taxed at the individual emirate level. This system has been in place for decades through special agreements between the companies and the local governments. The new federal law was specifically designed not to mess with these critical agreements. What's interesting is that this exemption can also cover non-extractive businesses. This might be a company that manages rights to water resources without actually digging or drilling anything. To get this exemption, they need a special license from a local government and must already be paying some kind of emirate-level tax or fee. This two-layer system makes sure the UAE's most important industry stays under the direct control of the emirates that manage those resources, protecting a core pillar of the country's economy. The UAE's vision isn't just about money and business. The corporate tax law also makes a powerful statement about social good by giving a full exemption to charities and public benefit organizations. Think about a non-profit hospital giving free medical care, a foundation offering scholarships, or a group dedicated to protecting the environment. As long as these organizations are officially registered and work for the public good, they are completely exempt from corporate tax. To get this status, an organization has to apply to the tax authority and prove it operates for religious, charitable, scientific, or cultural purposes, with no goal of making a profit for its members. And this isn't just for local charities. A foreign public benefit group working in the UAE can also get the exemption if it meets the same high standards. This is a policy designed to encourage giving and social development. It makes sure that money meant to help people is actually used to help people instead of getting eaten up by taxes. Finally, we get to the entities that help make the UAE a global financial hub. Government bodies and companies controlled by the government are, as you'd guess, exempt from the tax. The same goes for public and private pension funds, which is critical for protecting the retirement savings of everyone here. On top of that, qualifying investment funds and real estate investment trusts, REITs, can also be exempt which is a huge carrot for the financial services industry. It keeps the UAE competitive as a top place to manage wealth. But here is the most recent and maybe most surprising update. A cabinet decision from May 2025, decision number 55, completely changed the game. Before, only a UAE company that was fully owned by an exempt entity, like a pension fund, was also exempt. But now, this exemption also applies to foreign companies that are wholly owned by an exempt UAE entity. Let's break that down. Say a UAE government pension fund owns a company in London to manage its European investments. Because of this new decision, that London company can now be exempt from UAE corporate tax, as long as its purpose is to support its exempt UAE owner. This was a brilliant move. It levels the playing field for local and foreign structures and solves a major tax headache for the UAE's global investment funds, cementing the country's status as a top-tier home for sovereign wealth. So, is the tax-free dream in the UAE really over? Absolutely not. It's just smarter now. The 9% tax is real, but the law provides clear, legal ways to get to a 0% rate. We've seen the small business relief that shields entrepreneurs with revenue under AED 3 million, and the powerful 0% rate for qualifying free zone companies that focus on international business. We've seen the exemptions for the country's vital natural resources, the support for charities, and the massive incentives for global investment funds. The key is to ignore the myths and understand the actual rules. For a huge number of businesses, paying 0% tax isn't the exception. It's the standard, as long as you structure yourself correctly and follow the law. But navigating this takes real expertise. The details matter, and a mistake can cost you. If you want to make sure your business is set up for maximum tax efficiency under the new law, please consider subscribing this Finance Stories channel. I can give you specific business cases through more videos based on your comments and help you legally optimize your tax position. Thanks for watching, and don't forget to like, share, and comment for more deep dives into the UAE business world.